Hello there. Welcome to the closing bell on the 7th of May. Boy, things are pretty well poised to go nuclear, aren't they? And again, I shoot this video on a Friday afternoon. I miss out on the Friday night session in the US, so you know what happened. And where I'm sitting after the terrible night on Thursday night in the US, things are pretty neatly poised. If the market keeps going, at this point, things could really start to ratchet up a gear. The selling could accelerate. So basically, the support levels that are there now do need to hold. And if they don't, really the downside can extend and I think surprise many with how vicious it can be. And that's across the board. I'm seeing charts set up at a point where really an extension will see an acceleration. So I want to show you those charts, the US dollar, 10-year bonds. We've been looking at all of this for the last few months. You shouldn't be surprised by what's going on with the analysis I've been showing you. It is starting to take shape now. So hopefully you're prepared for what is currently happening. So let's just jump to the charts and do a quick overview. I just want to give you a sense of what could be coming down the pike. So jumping to the US dollar here. Now, this is a very long-term chart of the US dollar. I just want to give you the sense of the fact that the US dollar is spiking quite dramatically. And just look at the dates down here. This is actually a chart going back to 1980. Right, so this is a very long-term chart of the US dollar. And you can see that in the past, once you've had that breakout, it's done a lot of work for many years. The US dollar so often just, treading water. And then you have a big spike. And then we're treading water again. And this has been years with this US dollar treading water. And I'm just wondering, are we in for something similar to what we saw back around 2000, the breakout? This is a range that lasted for a few years back then, the breakout, and then the really big move higher. And that was, around that 2000 to 2003 sort of crash in markets. Are we in for some sort of similar extension to the upside in this US dollar as people race to safety, as money is brought home from offshore investments, a lot of US dollars going offshore investing, rates now rising? Do we see a reversal? Are we on the edge of a really large capital flow reversal that could see many markets come off the boil in a big way? So we really are getting close to that point where it is decision time. And if we look at that bond market, those US 10 years neatly poised as well. And this is the thing that I've been showing you for a long time, this very long-term chart of those US 10-year bond yields. Now, this chart, when the chart is going down, the yield is going down, which means the price of those bonds is going up. So this is a bit of a weird chart. You've got to get your head around that. So when the yield is going up, that means the price of those bonds is going down. So this is actually a sell-off. When you're seeing these yields fly higher, people are actually losing money who have bought those bonds at a lower yield. The capital value of those bonds is actually going down. So I just want you to make sure that you understand that. And, for a generation, we've had this very steady downtrend. This is a chart showing you the rise in asset values across the world for the past generation. And, I can even do that one just to really drive home the point that 3% level is so important. And during this whole fall in yields, if we look at the lowest high in the trend, it's got to go back above there to threaten the trend. And for a generation, this trend has held beautifully. And now we're at the point of decision. If we bust up through here, up through that 3% level, I don't know what's going to happen, but I'm just saying that this is a very important technical point based on, 40 years, 35, 40 years of trading in those US bonds, and we've got inflation rampant, and Fed just about to raise rates, trying to chase inflation down. People are losing money in those bonds. Many people in like risk parity funds, which are leveraged, and they're leveraged and buying a large weighting of bonds compared to stocks to weight out the risks. So usually bond prices are going up if stock prices are going down. If stock prices are going up, bond prices are going down. So everything sort of evens itself out, and they make money that way. Now, when stock prices are going down and bond prices are going down, all of a sudden that whole strategy blows up very quickly, and they have to deleverage. They have to sell at some point when you've got stocks getting hammered and bonds getting hammered. So we're sort of getting to that point, I think, where you're going to have forced liquidations. And for me, seeing those US 10-year bonds crack up through this 3% level, what happens there? Are we about to see a real panic and see those bond yields really fly higher? And if we do see that, is that going to then kickstart a really big selling in especially tech stocks and general stocks as well? A bit of a readjustment in the whole market because the Fed is, no longer wanting to buy those bonds with printed money, and they're going to roll off the bonds that they own. They've got so many of those bonds, and they're saying they want to roll off that huge balance sheet of theirs slowly from here. So you don't have that support, but also you don't have the people who are front running them, who have been front running the Fed, buying those bonds ahead of them, knowing the Fed's going to keep buying. It was a lovely game while it lasted, and maybe that game's over for now. And what is the real price? This is the question the market needs to work out at this point. So does those 10-year bonds crack through the 3% I've been telling you about? Does it turn into a bit of a panic? If we look at other charts that are also looking poised, here is the weekly chart of the S&P 500. We've been following this closely. Looking at this correction, I've been showing you the weekly downtrend that's been in place, telling you where it should turn down from. We've got the sell pivot in place, turn back down there. I'm saying, well, watch out now. And the big level, of course, was the low of the whole correction, which is what we're flirting with right now. And we had the big sell-off on Thursday night. You will know whether the market continued on to the downside last night. Maybe it didn't, maybe it's not ready to crack fully yet. But the work has been done where we're getting closer to that point where we could see that sort of cascading to the downside effect. So if I just look at the whole rally since the crash, and we think about this whole rally in the S&P 500, there's your 2020 COVID crash. There's the Fed throwing the kitchen sink at it and causing a massive rally. Now inflation's out of control and they're having to chase it down, and stocks are way overinflated, and so many momentum chasers, all these HFTs, et cetera. Once the momentum's up, they're just buying and buying and buying the momentum. When that turns, all of a sudden they become sellers, or they certainly aren't buyers. So the momentum is shifting. And once we do crack these levels, my question, I guess, is do we then see a cascade to the midpoint of that range for starters? And really, big picture, why couldn't the price of the S&P come back to the buy zone of that whole wave, which would be a huge fall in the market? But initially, you just go step by step with these things. We're just near the point where there may not be a lot of support and there could be a bit of panic. And if we were to fall to that midpoint, that's around 3,500 in that S&P. That's 600 points. That's a 15% fall from where we are now. And it's very rare that we have these sort of setups in place where things are ripe but also the market doesn't make things easy. And so often these key levels, they hold for longer than you expect. And once they hold, all of a sudden the short squeeze takes hold and markets will rally again for a few weeks or a month or whatever, and things will look all right. But then all of a sudden it turns back down again. But this is one of those moments where things could start to cascade to the downside. So you do want to be prepared for what could be coming. So looking at the ASX 200, my setup for this is looking pretty bearish as well. And this is when I become more confident, is when I'm looking across many different markets, looking at that US dollar, looking at the 10-year bonds, looking at the S&P 500, looking at the ASX 200. If they're all saying big picture, watch out, then that's when you're really sitting up to take notice. So if we look at this ASX 200, I have shown you this before, this idea, and this is a monthly chart going back to 2000. So we have the peak of the rally into 2007. It took a decade for us to get back to that peak. And then we have the peak prior to the COVID crash. So this area is just a very important zone for the market, because if prices can't hold, and we've had this big rally, we've been topping out for nearly a year, lots of selling pressure, market not rallying at all. So if it turns back down, that's when you have, the false break, and that's when you can see a quick, sharp move to the downside. And this is the setup. It takes a long time to take hold, and it is just getting closer. If we look at what the market is doing right now, we're down 180 points at the moment, and you'll notice that where it's selling off to is below the low of that last month's candle, which was the highest price in the move. There was a new all-time high created. So a potential monthly sell pivot again this month, but we'll see how it plays out by the end of the month. There's a long way to go. But by the end of this month, it could be down there. That's sort of the setup that we're looking at, is as momentum turns down, it could turn down quite rapidly, because we have had, a long time of this Coke bottle getting shaken up. This market has been really going sideways for a year. So that's a year's worth of buying that's been going on here. If things turn down, all of a sudden, that whole year's worth of buying is out of the money and panicking. And that's what can create weight in the market once things turn down. If you've got all of this buying that's been going on that is out of the money and panicking, that's a lot of volume that's going to come out that needs to sell. And if the buyers aren't there, all of a sudden you get that sharp reaction. And that's where I talk about that, mean reversion, I guess. So if we look at that whole rally that we've had, in this ASX 200, if it turns down, especially back down through that correction low, again, you're looking at a move back to the point of control. That's down at 6,000 in our market. We're at 7,000 now, so that's 1,000 points. Again, you're talking about a 15% move that could be coming. We're certainly stronger than US markets, so that's not a done deal right now. But I think the momentum is shifting to the downside. So you can see here, weekly sell pivot last week, selling off below the low of that range. Pretty bad week. What are we going to see next week? If the US cracks, I think all of a sudden our market could be looking pretty tragic indeed. So that's probably enough for this week. Just to tell you, everything I've been discussing for the last few months, I've been showing you how these corrections develop and the fact that things were looking a bit iffy. Those 10-year bonds, as they continue to sell off, that could be a problem. They're now heading above 3% and on the edge, the US dollar at multi-decade highs on the edge. The S&P 500 on the edge, the ASX 200 on the edge. So it's just one of those moments to be prepared, batten down the hatches, and we shall see whether things can hold in there for now, or whether we're going to see a bit of a panicked sell-off for a bit, which will then provide some great opportunities down the track. Those mid-cap, small-cap stocks, plenty of them absolutely pummeled. I'm going to go hunting for bargains if this market gets smashed over the next month or two. And then I will be showing you those opportunities down the track. All right, that's enough. Please sign up, check out what I'm doing with Pivot Trader and Fat Tail Microcaps. And I will come back with more next week. Cheers.